Countries around the globe are ramping up their gold reserves, and it is not just about luxury, it's strategy. Take India for example. The Reserve Bank of India has already snapped up 19 tons of gold just 3 months into 2024. Now that is more than the total 16 tons it acquired throughout all of 2023. Clearly, there is a noticeable increase in their gold appetite. Meanwhile, over in China, the story is even more dramatic. They have been on a gold buying marathon for 17 straight months, pushing their total gold holdings to a hefty 2,262 tons. Now, this makes People's Bank of China the most voracious central bank gold buyer last year, adding 27 tons in just the first quarter of 2024. Despite these impressive numbers, China's gold stash is still just a tiny slice of its total reserves, especially compared to the gold holdings of central banks in more developed countries. But why this sudden global rush for gold? Here's the lowdown. Firstly, it's all about diversification. After the US slapped sanctions on Russian companies and froze Russian assets, countries began to rethink their reliance on the US dollar. China, for instance, has been reducing its dollar reserves dramatically since 2011, a trend that gained momentum after the pandemic hit. Secondly, there is gold's enduring appeal. Unlike currency, gold is universally accepted, doesn't depreciate, and isn't subject to political whims. Central banks manage their nation's currency, but economic downturns can devalue their currencies rapidly. Gold, on the other hand, is a finite resource. Its scarcity makes it a critical asset for stabilizing reserves, especially when the US dollar's value falls, making gold prices climb. As of May 2nd, a 10-gram slice of 24-karat gold in India would set you back about 73,650 rupees. With prices soaring, retail buyers might hold off on purchasing, while global gold ETFs are seeing continued outflows. So there you have it, a world buying tour of the world's gold craze. Who knew economics could be so glittering? If you like our video, don't forget to subscribe to Business Standard.